Good morning, everyone. Doing a sound test. How's everybody doing today? Hello. Hello, Eric. Okay, so let's see here. Let me make sure that's going good. Just gotta click things. I'll get the webcam up shortly. Want to take a look. There we go. Webcam is up. Hello. Alrighty. Hello, Con. Good to see you. Miss Actor. Kevin. Constantine. Eric. Good to see everyone here. Okay, so I wanted to do a kind of special session today, particularly on the kind of situation with AMC yesterday. Let me get one more tab here. And just one second. Need to get, for some reason, the one browser I use, Opera, has not shown my videos. Okay, that does. There we go. Morning, Jock Sam. So I want to do a special Q&A today and just kind of brief analysis on AMC yesterday. AMC had an absolutely insane move, but there was a lot of like kind of hidden gems in the move, in the price section, in the options that really had a huge impact and are kind of telling us where potential support is, how we should expect this to play out throughout the rest of the week, today and tomorrow. I think today is going to be a very different characteristic than yesterday. And I think Friday is going to be totally different from the other days. So let's explain first what's been happening in AMC. And I'm going to start off with a couple screenshots. Okay, so we're looking at an option chain here on AMC for the June 4th expiry, the short-dated options on AMC, expiring tomorrow. That's when we've been seeing a lot of activity on the last few weeks, is the weekly options expiring that Friday. So if we look at the different categories here, this is the actual options flow, the actual options volume, and this is the open interest right here. And when we look at this, we can see some things that really stand out. You can see some really big strikes here, like 39 or 40 strike, super big, lots of calls there, about 100,000. We can see. Let me go to a gold color on this one here. Let's try that. Okay, so you can see the 40 right here, boatload of options there. You can also see that the 50 major strikes, 104,000 calls at 50, and another big one, 108,000 at 60. And when we look at screenshot 2, so these are strikes a little bit further down the line. Going into the day, 73 was the top call. And that had a massive 233,000 calls. It was only after AMC had ripped around, it was around 12:15 in Eastern time, 9:15 Pacific, and started ripping up to 60, 70, that market makers had to start to expand the calls further out. This is rare for a market maker to, whatever their top call is. Keep in mind, when the option change started in the day, 73 was the farthest out call you could buy for June 4th. But then the pressure built up so high that they had to start creating calls and markets available for strikes all the way out to 120. I think last I looked this morning, they were up to 145. So they've really extended the strikes out massively on AMC. What you notice is that there's a solid amount of volume up to the top strike of the day, and then you get very little volume beyond that. And part of that's understandable. There weren't calls available past 73 until several hours in the session. And then they started opening up more. But it still never really filled out a whole lot of volume, with the top 120 having 5,000 calls. You compare that to the 73 strike having 233,000 calls. That's massive. The fact that there's not a whole lot of volume past this tells me that AMC is going to have a hard time getting past that, because there isn't a whole lot of fuel past that point. Also, looking at today, real quick, let me just take a look at AMC on the... So right now, the top strike is 145. And we do have some volume past the 73, but not a whole lot. It's thin, a few hundred few hundred calls, or a few hundred open interest, 1,500 open interest, 3,000 open interest, 3,300 at 120. We have no open interest past 120. And even right now, the open interest at 73 is about 44,000. So looking at all this data, it basically communicates to me that I think AMC is going to have a hard time getting past 73 today. It's going to need to build a whole new set of call volume past the 73 strike to be able to really have the fuel to go beyond that. It also means that, with these large amounts of calls at the 40 and the 50, or the 40 and the 30. So look at that real quick. Go back to this one here. 30, we had a decent amount at 30. 40 is where you see a lot of calls at 100,000 there. I think probably 40 or potentially 30 becomes support on pullbacks, and then it'll try and build further on that. Couple things I would like to mention now that we've kind of gone over the options volume and everything like that is regarding the actual price action. So what is really interesting, and this was something that we had actually scalped yesterday, was the time of the move and the price. So let's expand this out. And now we're just looking at the 5-minute. So we actually saw this pressure building here. We saw a potential breakout and pressure building here. And so we decided to scalp some of that. But, it's at a 50 strike, and there was a fair amount of options at that point. But the interesting thing about it was the timing. And so 9:15. If you also look at GME around 9:15 Pacific or 12:15 Eastern, it also started to ramp. And there were several stocks that all started to ramp at the same time. The BlackBerry, the AMC, the GME, they all started to ramp around the same time. And the move, once we got past 50, that's where it just really started to accelerate in an insane pace. Let's go back to our blue color. How can I choose another color? Well, we'll get to that later. So once we got past this 50 barrier, you can see massive price acceleration in a very short period of time. AME had gained at open on the day at 37, and it had climbed roughly $12 over a period of 2.5 hours. And yet it went from 50 to 62, same $12 gain in 15 minutes. If I had to guess, I think a large player got stopped out at that level because that was just a massive amount of acceleration. I don't think it was necessarily a situation of dealers having to actually buy more AMC shares at that point. I think they were probably buying AMC shares throughout the day and were relatively or sufficiently hedged. I mean, we saw a boatload of calls come in at the 50, throughout the day. But to go $12 in 15 minutes, then have a massive sell-off on a halt, and then if you look at it, it had one more accelerative loop up there. It went in 10 minutes. It went from 57 all the way up to 72. Some player got stopped out. Somebody got stopped out most likely. Potential margin call even. The fact that it was kind of sedated and building, but then just this massive acceleration, the volatility picks up massively once we clear the 50. Somebody got stopped out. Most likely somebody got stopped out at that point. After these two, super parabolic exhaustive runs, it just consolidated after that. So no more accelerative gains. There was no more fuel to get stopped out. No large players getting stopped out. And so because there was no more fuel and dealers are already hedged at that point, we really didn't have any fuel to have any massive gains past that. It started to ramp a little bit in pre-market, but then they announced that they're selling 11 million shares. And so that kind of dilutes the situation, so to say. And that kind of, I get it. They're raising capital. Yeah, that's fine. But the bottom line is that started to sell off in it. And now you kind of create a fuel for potential downside. Do I think AMC has potential more gains in it today? Yes. I do think, though, it's going to struggle to get past the pre-market highs. And it's going to need, I don't think there's any more players that are trying to short this stock. Dear hedge funds, if you are, please watch this. If you are trying to short meme stocks again, stop. You're going to get brutalized. The Wall Street Bets crowd, These meme stocks are not to be trifled with. You are going to get brutalized. All it takes is for us collectively to come together over a few days, and we will totally margin call your ass. So stop shorting these meme stocks. Bad idea. You're going to get murdered if we find out that you're shorting these stocks heavily again. So stop. We now know who you are. We now know where there are large concentrations. We now know how to totally short squeeze your ass. So hedge funds, stop. Find other things to trade. Do not trade these meme stocks. This is our territory. So with that being said, I don't think we're going to see any new players want to short, any large players want to short. I think whoever did short yesterday is probably regretting that decision and probably will never touch AMC again or GME or any of these stocks. And so I think that if we start to clear 64, 65 and we see some good options building, then we're going to head to this 72, 73 and see what kind of call volume, what kind of option volume is there. I am having a hard time thinking that we are going to have the same kind of ramp yesterday because I don't think the fuel is there. On top of it, AMC sold shares. And on top of it, if people have been buying calls all week, you're talking the first. So people have been buying calls at 30 or 40 at 50. Those calls for June 4th, those calls are going to be expiring and decaying really, really fast. The theta decay and everything on that is going to be decaying super, super fast. That means those calls are going to be losing value very, very quickly. So I think today is probably the last day of the ramp for the week. And I think on Friday you see a pullback because right now 40% of the options in AMC right now are expiring this Friday. That's a lot of options. 4 out of every 10 options in AMC right now are expiring tomorrow. That's a lot of fuel being pulled out of the markets. So if they're not being monetized today, they're going to be monetized tomorrow. And with that being said, I'm looking at this as saying, okay, AMC's probably got another day of this. And then I think you're going to see a pullback in AMC. And where am I looking for potential pullbacks? I think potential 40, I think 25, maybe a 30 play. But we'll have to see. Looking at the option open interest and how it plays out today, the 40 strike, there's a fair amount of options there that are beyond June 4th that are going to probably want to support that. And so I think what's going to happen is that they'll try another reload next week. They'll get monetized, some today, some tomorrow. Then on Monday, they're going to reset the weekly options on that and try and push it higher. The one that actually looks more interesting to me, AMC looks a little too parabolic. Like it didn't really build a base. It had a little bit of a base around 10, but in 4 weeks to go from 10 to 70, that is what I would call overshooting. And so when I look at that, and it is the all-time high, we destroyed the all-time high. The all-time high prior to this was 36. So we've, at its peak, we doubled the all-time high. And we did that in 2 weeks. So when I look at that, I feel like these kind of parabolic moves generally are not sustainable. Can they overshoot? Can it go to 100? Can it go beyond that? Possibly. But it has to build a base of support to do that. And there has to be fuel in the market for that to happen. The fuel is there in terms of options, but the fuel is probably gone in terms of sellers. And so when I look at that, I look at that as, okay, you're probably going to need to see a little bit of a pullback and a basing in AMC before we can rip higher. The one that does seem a little bit more interesting to me is GME. And here's the GME rip right around the same time. GME just started to rip. This is the 9:15 when AMC started to rip. And then look at GME. Huge acceleration. GME wasn't doing anything on the day. Stuck between 261 and 245. Very small day. And then, in 1, 2, 3, 4, 5 candles in 25-minute period, it went from 254 and shot up to 293. That's a huge price acceleration. And so, that all happened around the same time. Probably somebody that was short GME, also short AMC. The thing I like about GME a little bit more is this longer time frame. Is see how it's building a base, had a rip, came almost all the way back down to where the rip started, made a second attempt, but then it built a base. And that's what you want to see, because that becomes a base of liquidity and a floor to where people start saying, hey, this has, we feel this is a good value for this here. We're going to continue to buy it. It sold off from 375 down to 150 and then just stuck a line in the sand. You're talking several weeks, 1, 2, 3, 4, 5 weeks. It could not really close below the 150 barrier. That tells me that people felt like, hey, this has a good value at 150. We're going to hold the line here. And, so you rip, pull back, low base, rip, build a higher base. Now we're attacking that. It's not quite a rip in GME, but I think it's probably going to get to this 350 area. And then I think it's going to pull back and try and build a higher base. So I like this from a order flow and price action perspective a little bit more, because I feel like this is building order flow and liquidity and saying, hey, we feel that there's a value here. We don't quite have that in AMC. We have it on a short-term basis, but we don't have it on a long-term basis. And so when I look at that, I feel like, hey, if this happens to get to 175, 150, to me, that's a very good value play on GME. And, try and target 282, 300. That to me is a very good value play. I think this is going to continue to build pressure, and it's going to really continue to try and get a weekly close above 325. We have not had a weekly close above, what's the highest? Yeah, we have not had a weekly close above 325 ever. And so I think it's going to want to continue to do that. This expansion and volatility, and this kind of breakout generally leads to more probabilistic being that it's going to break higher. I don't know if it's going to do it on this attempt. I suspect another pullback, base, and then build higher in GME. So that's kind of what's been going on with meme stocks. I wanted to kind of do a special session on that. One last concern is, in the 21 years that I've been doing this, I've noticed that when there are high concentrations of activity and volume in a few instruments, that pulls liquidity away from other instruments. If, was it AMC yesterday did 600 plus million shares traded. If that money is going into AMC, it's not going into other broad base of instruments. And that's pulling liquidity out of other instruments. And that tends to have effects. When you start to pull liquidity out and direct it into a few instruments, that can destabilize markets. You can see very strong risk moves in markets when liquidity gets highly concentrated into a few stocks or a few instruments. So there are some concerns about potential volatility increases in the markets. And when this party comes crashing down, whenever that is, that could create a serious unwind in a lot of markets. So while I think the overall work that Wall Street Bets is doing and is concentrating into a few stocks, I also think that it can have a destabilizing effect. And so that does leave me a little bit concerned about potential volatility increases in the future. Anything else I want to say on these things right here? Yes, it's super, super important that you understand that your first job as a trader is to control risk. If you're not able to control risk, you shouldn't be trading in the markets. Anytime I'm in a situation where I feel like I'm no longer able to control risk, I will just start closing positions until I feel like I can control risk, win or loss. It's very easy to look at a chart like this and be like, wow, if I bought a week ago at 175, I'd be up, $9 a share. Or it's very easy to look at AMC and be like, wow, if I had bought 2 weeks ago at $12, I would have made X amount of dollars. The thing about this that you don't understand is that when situations like this, when stocks get really very volatile, brokers will start increasing margin requirements. And margin requirements can be fine on all your other stocks, but if margin increases on one particular stock by 100, 200, 400%, that can affect your overall portfolio. That could put you in an over-leveraged position and make it very, very hard to control risk. Like what I was starting off margin requirements when I was trading a little bit of AMC yesterday had quadrupled over the entire session. You never want to be in a situation where your margin is going to quadruple over a session, because that means that the available capital you have for all your other stocks and positions, all it takes is a little bit of a downturn in those positions and you're going to get a margin call. And then all your positions are going to be closed wherever they're at. And that's something you need to avoid. Also, it's important to understand that, moves like this from 50 to 62 and then down back to 50, that is very hard to control risk. Same thing for this one here. Rip up to 72 and then 20 minutes later, it's at 57. That is very hard to control risk. And so it's super important that you understand that you're going to hear a lot of stories about people making gangster money on AMC, but you're probably not going to hear a lot of stories about people who lost their shirt. And for every person that's made $1 million on AMC, there's probably a person who's lost $1 million on AMC. Super, super important. Controlling risk is what will keep you in this game long term. You may make $1 million on AMC one day, but with those kind of risks and those kind of leverage, you can lose it just as fast. Controlling risk means that when you make big gains, you don't lose them all in a day. I literally had a client recently who in the last year and a half had turned $47,000 into $583,000. Actually, euros. They did that in a year and a half. They made about 120K day trading stocks, and then they started riding the crypto wave. But because they kept taking bigger and bigger risks, they lost almost all of that within 2 weeks. And that's what happens when you don't control risk. If you control risk, you would never lose 90% of your portfolio in 2 weeks, no matter what you're trading. Controlling risk means that you might miss out on some of that upside, but you won't ever have a big crash. And that will keep you in the game long term. Trust me right now, that trader who went from 47,000 euros to 583,000 and then back down to where they started, I guarantee the number one thought in their mind and regret right now is, wow, if I just controlled risk, I would still have a good portion of that capital. I'm sure they'd be willing to keep half or a third of those profits and rather have had that by controlling risk than over leveraging. Many traders will get seduced by the dark side of the profits of these rips like in AMC and things like that. And it's tempting, trust me. It's like a very sexy seductress, what is that? Seductress? I don't know, whatever it is, however you'd say it. But it is seductive. And it's very easy to look at this and be like, wow, if I'd done this, I would have made X amount of thousands of dollars, tens of thousands of dollars, hundreds of thousands of dollars. But you're also not looking at the risk in those situations. And I can tell you, I've seen thousands of accounts that have blown up from not controlling risk. I've never seen an account with an edge blow up from controlling risk. I've never seen it happen in history. I've seen tens of thousands of accounts over my 21 years, maybe even hundreds of thousands of accounts. When I worked at the broker, I got access to a lot of these accounts, and it was a lot of information in them. There are stories upon stories upon stories, like war and peace sized books of accounts that have blown up from not controlling risk. But as somebody with even a marginal edge, controlled risk, they never blew up their account in history. Never had a margin call. That is super important that you understand that. Trading is risky. Trading stocks like this has an immense amount of risk. And it's important to understand that some of these moves are going to be very volatile and will probably move outside of your risk profiles. Super, super important that when you're trading this, you are controlling risk. Very, very important. Okay. So any last questions before we kind of wrap up this special session, do a little open Q&A? Justin Goodman saying define risk, extract alpha, that's it. Yes. First job as a trader is to define risk. Cash flow mate saying great review. I appreciate it. Thank you. Let's see here. Good morning to you, Victor. Constantine, hello, everybody. Thank you for reminding about risk control. Super, super important. Beginning traders, I can always spot a beginning trader because a beginning trader, when they talk about potential trades, they always think about the first thing that's on their mind is how much money they can make. A professional trader flips that equation. Their first thought is, how can I control my risk on this trade? How can I define my risk? How can I completely, solidify the max amount of risk I can take on this trade? Once they know the risk, then they start looking at potential upside. When I look at option plays and I evaluate options, a beginning trader will look at the option P&L profile and be like, hey, how much money can I make in this option? The first thing I look at is, what is my max loss on this potential option play? Only then can I define my risk. And only then can I be like, hey, is this an acceptable risk to take on or not? If it is, then I look to see if I can extract alpha from the market. But beginning traders don't see that. And that may work for a few trades. You may get a few rips in AMC or GME and make some money here and there. $10,000, $100,000, $1 million here and there. But it's only going to take one moment where you are thinking about profit first and risk second, to where that thing that you thought about second, risk, actually becomes the defining issue of that trade. And maybe the defining issue of your account, and blows up your account. Never neglect the one thing that can sink your entire ship. The Titanic did that, didn't work out so well for them. The history is littered with people who only thought about the potential upside and didn't calculate the risks. They focused on what they were going to gain, not what they could potentially lose. And then because of that, they lost more than they expected because they weren't focused on that. So, super, super important. Okay, I'm out of mods saying it's night here in Malaysia. Welcome. Good evening to you. I am looking at the options flows right now in AMC. Let me take a screenshot of what I see here. And I'll show you it's not as gangster options as it was before. Right now, the biggest strike is the 73, which was the top strike. No, I don't want to do that. Okay, sorry, that's the wrong one. Control print screen. Okay. This is your options board on AMC right now, your options chain for the June 4th expiry. And you can see the biggest strike right here. Oh, man, did I not do the price on that? Stupid. I just called myself stupid on live camera. Okay, let's do this again. There we go. Gotcha. Okay. So you can see that the 73 strike, there's your open interest. There's your actual volume right now. Very light volumes beyond this. There are some people that are throwing some super far out calls trying to produce a gamma squeeze. I don't think it's going to happen today. And you can see even like the 145 strike is selling for 222, which is insane. The current price of AMC is 56. So we look at that. That's not the one I was looking for. There we go. 56. That call is selling for roughly $10, $11. That means that AMC would have to close above 66 for them to even make some money on this trade. Any money whatsoever. Implied volatility, absolutely insane. I can't think of a time that I have seen implied volatility for the at the money calls at 600+%. I don't think I've ever seen that in history. So brokers are just raising the margins and increasing prices to trade these things. Also keep in mind the theta decay right now on these things is like the at the money calls, the theta decay is $3.20. So not only does it have to, like, let's say you buy the 57 call for right now, let's say you get the bid for 1060. Okay, that means that AMC at a minimum has to close $10.60 above 57. That's what, $67? But then on top of that, you also have a theta decay of roughly $3.20. So by the end of the day, if you haven't closed out that option, even if that option is now at the money, it's also $3 less by the end of the close. So you have to gain another $3+ on there just to break even. This is absolutely insane. Theta decay on this right now is for real. So With that being said, yeah, we might. It's very possible that AMC has a rollback today. That was an absolute gangbusters move. We're not seeing the volumes that we did yesterday. There's probably no more short sellers in the market. They're licking their wounds. They're probably experiencing their first margin call ever as a hedge fund and feeling like complete idiots for blowing up millions of dollars in value within a day. And so you're just not going to have the fuel that you did yesterday. And so I'm not that, plus AMC selling 11 plus million shares. You're seeing AMC roll over right now. Also, if AMC starts to roll over fast to like 40 and 30 really fast, whoever's long those calls at $25, $30, they're going to see like, oh my God, my option was worth $30, $40. Now it's worth $5. I just lost, 5, 6 of my profits or whatever it is. They're going to be like, I'm out. And then they'll close those calls, and then they pull that fuel out of the markets, and the dealers are no longer short calls anymore. They can remove those hedges. So you create further fuel, you pull further fuel out of the market. So super, super important. Okay, any last questions before we wrap it up? Because today I have a conference on marijuana, cannabis. I am speaking at the Cannabis Capital Conference, and that will be at, and you can see I'll put it right here in the chat. Can I post in this chat? Can I? I can. Okay, so I will be speaking at that conference. I will be talking about cannabis stocks and and anything in the cannabis space, and what I think are some of the top plays from an options and stock trading play. I won't talk about investing. That's not my thing, and I'm not going to talk as a cannabis expert. I'm mostly going to talk as a trader and things that you want to watch out for in the space right now. So I hope to see you there. I will be speaking at, I think it's 10:50 Eastern, which comes out to 7:50 Pacific. Let me make sure. Let's see here. Oh, that's the June 4th agenda. Yeah. Okay. So I'll be speaking today. I hope to see you there for that. Yes. 10:50 Eastern, 7:50 Pacific. So education, talking about trading cannabis stocks. So I hope to see you there. We'll take a few questions and then we'll wrap it up because I need to do some live trading with the members and then prepare for the webinar. I say it all the time, the ball always finds you. Might get away once or twice, maybe 10 times, but just take one time and that's it. Totally true. Okay, call out from Constantine, BBBY. Someone who's been trading meme stocks lately. H4 long 30. Maybe. BBY is rolling over pretty hard. Let me look at the option open interest on BBBY. See what's going on. Right now you got about 230,000 calls, 194,000 puts. 30% of the options are rolling off this June OPEX, which is June 18th. In terms of your area 30, it's not bad. I think between 30 and say 27.5. Those would be my support lines. I mean, keep in mind, this is where the rip started. And it is oftentimes that you have these just super extensive rips that revert 80, 90, 100% of their moves. So I would say between 30 and 27.5 is where I'd be looking. Yeah. But I would not be buying it right now. It's getting hammered right off the open. All the stocks, the meme stocks are getting, hammered. I mean, this is down $11 on the open. GME down $12 on the open. Yeah. Even BlackBerry was another one. BlackBerry was one of those yesterday that had a pretty extensive rip, good aftermarket. And look at that, from 20 to 17. That's not as big, but it's definitely there. It's definitely there. And, we're seeing risk off in the markets, potential contagion in the markets. Again, that happens. That happens when liquidity concentrates in a few stocks. It destabilizes the liquidity across all the stocks, all the markets. And once that fuel and vacuum gets pulled out, you have this liquidity vacuum and it creates a risk off event. So, yeah. Okay, we'll do 2 more call outs and then we'll wrap it up for the day. Cirrus Pharmaceuticals. I've never seen this one before. Volume is incredibly low. 100K. Not a whole lot of eyes in the market. Let's see if you have some options on this bad boy. Do not. So I got no options data on this one here. I mean, it seems like it wants to roll over a little bit more. I'd probably wait for a little bit more on this one here. Yeah, I would look maybe more towards 5 before considering that. You wouldn't need a huge stop on that one. I mean, the low for the last several years is 4.25. Put your stop loss below that. See if you find a good base. Yeah. BB BlackBerry. Again, another one of those meme stocks. $12 potentially. It's got about 35% of the options rolling off this Friday. Let's take a look at the 1 hour. That's a lot of volatility extension there. You're thinking 12? Yeah, around 11.82, between 11.82 and I would say 10.8. Maybe even like 10.5. Yeah, I'd say between 11.82 and 10.5 would be my zone. That's kind of what I'm thinking. Yeah. Okay, I got to wrap it up. I got to do a little bit of live trading, manage some stuff in the portfolio before I speak in about an hour from now. I hope to see you at the Benzinga Cannabis Conference. There's a lot of great speakers on there talking about the industry, and a lot of, just the industry experts in this are stacked, like quite stacked. So, if you wanted to invest in it or know more about the industry, look at potential companies, some small cap companies that you think might have big potential and you want to invest in this space, which I think is a good space long term, then definitely come to this conference. It's going to be great. So if you haven't already, whack that like button. We appreciate it. Kind of did a special session today. I won't be on tomorrow, just doing private member webinar tomorrow. But be smart, control risk. Trading is risky. Risk first should be your first thought. You should always be thinking risk first before you think profits. So with that being said, good luck trading. I'll see you guys next time. Take care, everyone.